Good afternoon, everyone, and thank you very much for joining me. This is the non-farm payroll live trade. It's the 10th of March. It's just gone past 20 past 1 GMT, 20 past 3 ZA. My name is Russell Shaw. I'm a senior market specialist at FXCM, and my email address rshaw@fxcm.com. I'm just going to go ahead and bring up our disclaimers. I'll keep this on screen for a few moments. Hey, Indran, good afternoon. Andrew, good afternoon to you. Nice to have you guys on the webinar. Thanks, everyone, for joining. It's much appreciated, and hopefully we can do okay in the trade. It's going to be a very interesting non-farm payroll, that's for certain. Here's our market commentaries disclaimer. All right, can I just get confirmation you guys can see me, you can see the screen, and you can hear me? Just want to double check. Okay, great. All right, excellent. All right, and we'll be using market scope for the trade. Let me show you my market scope screen. I've actually got 3 here. We'll generally spend the predominant amount of time on the 1 minute chart. I do have a 1 hour just to see the pivots. You can see we're right in the middle of pivots. We're right in no man's land, which is interesting. And I've got a 15-minute chart here as well. We generally keep the 1 minute chart on screen for most of the trade anyways. So I expect that's going to be similar this time around. Just to give you an idea of what we are looking to do today, we're going to be trading Euro US dollar. So we'll be trading Euro US dollar, and we'll put a stop loss in of 20 pips. Okay, we'll put a take profit in of 20 pips. Okay, so that gives us a 1-for-1 risk to reward ratio. Okay, what we'd like to do is, if we're going to get stopped out, we want to try and get the stop loss less than 20 pips. Ideally, we have been stopped out on 20 before, but most of the time we do get the stop loss up, and that's going to be part of the exercise, stop loss management. We're not going to put on the trade ahead of the non-farm payrolls. We're actually going to put it on after the non-farm payrolls. And what we're going to be looking for is effectively an impulse up or an impulse down, one or the other, okay? And then let's just say it's an impulse up, we'll look for a correction. If it's an impulse down, we'll look for a correction, and then we'll try enter on the corrections. So that's effectively what we're trying to do here, trying to get in over there, So either long or short, that's okay, but we'll have to wait for the impulse. The non-farm payroll, the calendars vary, but so the one I looked at, it's got 224,000. So we want to see how close it comes to 224,000. And then the wages. Okay, I want to see what wages come in, and my calendar says 0.3%. We've got 5 minutes, so still got some time. Let's just talk about how we're going to enter. I'm going to change this back to black. We're going to enter on what we call a pivot point reversal or a reference candle reversal. So we're effectively going to be looking for 3 candles, and these are the conditions. So if we go long, we need to have a candle that's got the lowest low amongst 3 candles, and then we've got to get a candle that takes out the reference candle's high and closes above the reference candle. That would be our entry. Without that, we can't enter. So we effectively, just to give you an idea, we're going to get a impulse up, correction down, wait for the pattern, and then we'll try and move it up. Or If it's going to the downside, the pattern will look like this. Okay. And I'll just switch colors here. So here we would need the highest high in at least 3 candles. And then we would need the candle to the right of it to move below the reference candle's low and close below the reference candle's low. So that's the system. That's how we're going to be looking to trade it. Just thinking if there's anything else. So impulse down, correction up, then we'll need the 3 candles, and then we'll trade it down. We're going to be, I said, we're trading euro US dollar. We've got 3 minutes, but we've got just under 3 minutes. Just to give you the thinking below, my thinking before we get the trade out. Anything above 224,000, I think the dollar is going to probably be bid. In other words, we'll be looking to short euro, go long US dollar. I would expect, we'll see on the impulses. If there is a movement below the 224,000, then possibly the US dollar gets sold off. Then the euro is probably bid. And then we'll take a look at this 0.3%, the wages month on month. Is there any inflation is there any wage inflation? And I think if there's wage inflation there, it could be dollar positive as well. So that's the thinking behind the trade. We've got exactly a minute and a half. And I think this is a good time to bring up our chart over here. What you can take a look at is there is a countdown. So this counts, we're looking at a 1 minute chart. So this will count down from 60 seconds all the way down. And then we've got a stochastic in as well to read the momentum. And this is just a 15.55. If the stochastic makes it through to the upper 80 or the lower 20, then we probably got some momentum behind us to help us with the trade. And we'll see if we can use that to our advantage. I might go silent because it's actually a fair amount of pressure trading in front of a crowd, but I do enjoy it. Let's just see, we've got another 35 seconds here. All right, and we'll get an impulse fairly soon. Okay, we've got 5 seconds. Let's see what happens. Whoa. All right, so I think we've missed. Here. There's a ton of money going into the euro, shorting the US dollar. Let's see if I can get the numbers out. Remember, 224 was what we were looking at. This would be in stark contrast to the 517,000 we got for February. In other words, 517,000 were jobs were created in January. That's a big impulse. Okay, we haven't got a position on just yet. Okay, came in at 311,000, expected 224,000, so it did beat, but it certainly is a lot softer than last month. I'll see if I can get some more information here. Okay, 311. All right, let's see if we can get some trades in. It's going to be a tough trade, this. Because there's the impulse. Look at the stochastic. The stochastic's made its way into 80. Okay, so we're getting some sort of pullback. We'll see if we can get the reference candle reversals here. Money now flowing back into the US dollar. Okay, so there's a market now movement into the US dollar. Okay, so 311 there. We've got 10 seconds left on this candle. Richard, nice to see you on the webinar. Lower wage inflation. Okay, we don't have the 3 candles just yet. All right, there's condition 2. We might be able to go long here. Let's just wait. We've got another 47 seconds. Don't quite have the signal yet. I've got average earnings at 0.3, coming in at 0.3. All right. Is that right? 0.2, I beg your pardon. 0.2, okay. I think we can enter soon. All right, I've gone long here. Here's the take profit, here's the stop loss. We've got some resistance ahead of us right here. Okay, here's a bullish candle. Yeah, it's hitting at resistance. Look at this resistance now. This is our first hurdle. If we can overcome this resistance, we can start moving the stop up. Okay, resistance still fighting us. Okay, keep an eye on the stochastic. If the stochastic falls here, we might be in trouble. Okay, bulls are going to have another crack at resistance. See that resistance is quite steadfast right here. It's the 106.30 level. So we've got higher lows here. We've got lower highs. So we've got some sort of pattern here, almost some sort of, let's call it a triangle or a pennant for now. Bulls trying to take out this resistance. Resistance still holding. Look at that. Okay, keep an eye on that stochastic. We need the stochastic to hold this 80. Okay, still stuck in the middle of resistance here. This resistance really strong. Oh, there was a gap down. Yeah, that's not good. Okay, bull's having another crack at that resistance. There's a bit of power. All right, it's peaked above it there. Yeah, Howard's saying that the high lows seem to be a good sign. Yeah. So this is an interesting candle. Look, it's only a 1 minute chart, which makes it very volatile compared to when you're looking at, say, a higher time frame. But this is a strong candle here. Okay, there we're starting to push above resistance. Okay, 50 seconds. Let's see what the bulls can do here. Okay, they're still pushing through the resistance. Haven't had an opportunity to move the stop up just yet. I want to get past this resistance level. We've got 6 seconds. The doji here, a little bit of uncertainty coming in. Hopefully it's uncertainty from the bears. We do have higher highs, higher lows. So do the bulls have the upper hand? That's going to be interesting. Okay, here we go. Have another crack at it. Still getting caught in that resistance. Yeah, pushing a bit high. That's better. Okay, 22 seconds. Okay, we're going to start locking in some profit soon. Okay, I've moved the stop just below the resistance turn support. So now we've locked in some profit. So we can't lose on this trade. Moving the stop up. We're very close, 18. There we go. All right. And we've just hit our take profit. Okay, so those nice, as you said, Howard, nice higher lows there. Take a look at that stochastic. Really, the stochastic showed the strong underlying momentum there. And we've got a nice movement up there. All right, so that is the trade for this non-farm payroll. I hope that you all enjoyed it. I'm going to have this uploaded to YouTube and I'll put it onto our Telegram channel as well. Thank you very much for joining, guys. Much appreciated. And we will do this again next non-farm payrolls. Thanks very much.